Hello, good day everyone. My name still remains Miss Blessing, bringing you accounting and finance lecture. A wise man said, when purpose is not known, abuse is inevitable. You as an accountant, you as a financier, you who wants to know everything about accounting, who are you as an accountant? Who are you? Now, let me tell you. An accountant is a person who prepares, he analyzes and interprets financial information. He is a person that prepares, he analyzes and interprets financial information. What are those duties as an accountant? What is your role? What is your duty? What is your objective? One of the main duty of an accountant is to what? Prepare financial record. Secondly is to what? Protect shareholders' funds, maximize shareholders' funds, analyze what? Prepare, provide advisory services, and lots more. Is that okay? You have the responsibility as an accountant to what? Prepare financial record, maximize shareholders' funds, provide advisory services, then what? Protect shareholders' what? Funds. Is that okay? And lots more. Is that okay? And I'll have to tell you the difference between what? Accounting and accountant. I've told you who an accountant is, so I'm differentiating between accounting, bookkeeping, and accounts. Is that okay? Today, just like I told you, I'll go into to and explain it to you, because you have to know this basis so that we can proceed to the next level. Is that okay? So what is an accounting? Now, I'm preparing accounts. What is an accounting? Now, accounting, it is a process of recording, analyzing, communicating, interpreting financial what? Information. A process of what? It takes a process to what? To prepare accounting. It's a process of recording, analyzing, creating, communicating, summarizing, and interpreting what? Financial information to interested parties. To enable them make informed decisions. Listen, not everybody make use of financial statement. It is interested parties. Who are those interested parties who make use of these financial records? One of them are what? They are what? Tax analysts, governments, your employees, even the employers make use of what? Financial records. Your debtors, your suppliers, they make use of financial records. Please go and know why. Because of time, please know them. These are those people who make it because what? It's necessary for them. Do you understand? In one way of it, it's what? It's beneficial. They need to know. They need to be aware for one reason or the other. That's your assignment. Go and know why. Is that okay? Then, what is this what? Bookkeeping. Bookkeeping is just a record, like I told you, in a day-to-day what? Transaction, in a systematic order. A day-to-day recording of accounts in a systematic order. It is a day-to-day recording of accounts in a systematic order. Is that okay? It doesn't require more skills. Anybody can be a bookkeeper. As a matter of fact, in as much as you are doing a business, you are buying something, you are a bookkeeper, because you will record. You go to a shop, I want to buy something. The person there will say, okay, I sold fish 15 naira. He will write it. This is a bookkeeper. Is that okay? So let me just give you just 3 or 4 differences between a bookkeeper and what? An accountant. Bookkeeping and what? Accounting. Bookkeeping is just a smaller scope, smaller aspect, a smaller field of accounting. Why accounting deals with what? Large scope of accounting. because it requires skills, it requires what? Training, and it's complex in nature. Do you understand? A bookkeeper, a junior staff, a junior accountant who just finished secondary school, study accounting, can be a bookkeeper. Yes, but it requires what? Years. It requires months. It requires what? Years to what? To be a professional accountant. It requires what? You have to be under one what? You have to pass some certain what? Exam before you can be a what? A professional accountant. Example like ACCA, ICANN, ANAN. Is that okay? A bookkeeping is what? Simple in nature, but accounting is complex in nature because it requires what? Skills, thinking, analytical thinking, creativities, and making decisions. Is that okay? A junior staff can prepare an account, while accounting requires what? A professional. Is that okay? Within 1 week as a bookkeeper, you can, within a week or a month, you can become a bookkeeper, but it requires years of training to become what? An accountant. Okay, this is the difference between bookkeeping and accounting. Then what is that account? Like I told you last week, that an account is a record in a double entering what? Transaction. A record in a double entering transaction. Listen, the essence, everything about accounting deals with what? Double entering. There must be a receiver and there must be a what? A giver. It's a record. Account is a record in a double entering transaction. Double entry means there must be a two side. There must be a receiver who is giver and there must be one who is receiving. And don't forget our rules. You debit the receiver and credit the giver. A record in a double entry transaction that is kept for each class of assets, liability, income, expenses, provisions. Is that okay? So what we are saying in essence is that double entry transactions, what are those things, what are those items that will reckon in that double entry transaction? It could be an asset, it could be a liability, it could be an expenses, it could be income, it could be what? Provisions. Now let me break it down. What is an asset? Remember, it could be an asset, liabilities, income, expenses, expenses, provision, provisions. Is that okay? So these are all the items that we are recording in our double entering transaction. Question is, what is this asset? See, like I told you, I'm assuming zero knowledge. You don't know anything. That's why I'm breaking it bit by bit for you. What is this asset? An asset is what? I said an asset is anything of monetary value that an individual or an entity owns or control. An asset, I repeat, is anything of monetary value that an individual or an entity owns or control. Anything that has monetary value, anything that you can control, that has value to you, is an asset. And asset could be what? It could be tangible or intangible asset. And listen, an asset is something, you can also say, is something that is permanent in nature. It takes more than one accounting year. That is an asset. Asset are those, anything of monetary value that what? It takes one accounting year. Is that okay? It takes more accounting year. So the difference between assets, we have tangible assets and we have intangible assets. Those tangible assets are those assets you can see, you can touch, you can feel. Example, we have land and building, we have furniture and fittings, we have generators. Those things are permanent in nature. These are your what? Tangible assets that you can see. Why intangible assets are assets that you cannot see but you feel it. What are they? Goodwill, patent rights, copyright. These are intangible assets. For example, goodwill. What is goodwill? What is goodwill? Goodwill is something that what? It's a good reputation, good name that a company has created over the years. Is that okay? For example, Dangote. Dangote have created goodwill for himself. Why? Because of what? The value, because of the number of years, the experience, and what? The investment and investors he has attracted over the years. If you go to buy Dangote now, for example, he wants to sell his company. If his company is normally 50 million, they can't sell it 15 million. They will sell it trillions of naira. Why? Because he has what? Created what? Value. His company has created what? Good reputations over the years. So is that okay? So these are what? Tangible and intangible assets. And remember, an asset could be fixed asset and it could be what? Current assets. Like I said, fixed assets are those assets that are permanent in nature. Is that okay? Fixed assets, they are assets that are what? Permanent in nature, that we can see. They are what? Both fixed and what? But they are fixed assets. They are tangible and intangible. So current as fixed assets are what? Tangible and intangible, and it takes more than one accounting year. While current assets, these are assets that you what? Are of value. It takes less than one accounting year, usually 12 months, like your bank, like your what? Your cash, debtors. Is that okay? Those who are owing you, definitely they'll bring in money. These are your what? Current assets. Have I what? Done justice to that? All right, we have what? Liabilities. What is liability? Liability represents a company's financial obligation or debt to others. A company's obligations or debt to others, what the company owes outsiders. Is that okay? That is liability. As simple as it. What they owns to their suppliers. For example, you supply goods, they are owing you. You are they are what? The company is what? Like is liable to what? Pay. You must definitely pay. It's an obligation, and they will pay it. Is that okay? These are liabilities. So what is this income? Now, an income is what? Money received on a regular basis for work or through investment. The money you receive on regular basis. Income is money you receive on regular basis. You understand? On regular basis or through investment. Regular basis for work or through investment. That is income. What you receive on as a result of sales, you receive money, right? They are your income. You understand? Or through investment. You invest. What do? You receive what? Dividend. Is that okay? Income, returns. So this is what is called income. Then expenses. What is expenses? Expenses is the cost we incur in order to generate revenue. Cost we incur in order to generate revenue. Do you understand? Of course, we can't just start making expenses without what? A plan to what? To generate revenue. There's a reason why we carry out an expenses. Is that okay? And then we have what? It's an outflow of money. You can just say expenses is an outflow of money. So types of expenses, we have various types of expenses. We have operational expenses, we have what? Fixed expenses, and we have the what? Variable expenses. The operational expenses, they are those expenses we do on a daily basis. Those expenses we carry out on a daily basis, like what? You buy stationary transportation costs. These are what? Expenses. Then we have the fixed expenses. The fixed expenses are those expenses that are what? Permanent in nature. You understand? It's just fixed. For example, rent. Before you carry the business, are you going to stay on the air to do business? No, you must rent. So they are fixed in nature. Insurance. For example, business who insure company who insure their business, you will do it first. You understand? Then we have the what? Variable expenses, like what? Provisions. Do you get? Provisions, advertisement expenses, sales expenses. It varies. Is that okay? These are just what I explained. Then provisions. Provisions are what? Liabilities of uncertain timing. Present obligation arising from what? Past events. Is they are liabilities of uncertain timing. You just make proof in case something might come up. Because what? We don't know. It's only God that knows tomorrow, but we don't know what might happen. There are what? Obligations that what? Arises. You understand? Obligations that arises as what? From past events. For example, bad debt. Bad debt. You carry a business with somebody. After doing business, the person dies. What are you going to owe? These are bad debts. You make provisions. Warranty provisions also. For example, you sold goods to someone and you give him 1 year guarantee. After 2 days, he comes back, and then what? The thing has spoiled. Remember, you gave him guarantee. Who will bear the loss? It is you. It is you. So these are the provisions we make. They are what? They are what? Expenses. Okay, they are expenses. So these are what? Those items will enter in our double entry. Those items, those costs we incurred in our double entry. Is that okay? So having done this, let's talk about, let me round it up, the ethics of accounting. Remember, there is what? As an accountant, there are ways in which we are supposed to what? Carry ourselves, to comport ourselves as a professional accountant. You just cannot do it. You are not a bookkeeper. So what are those ethics? Those what? Ethics guiding what? And a professional accountant. I call them what? HOD, ICP. One is honesty. As an accountant, you must be honest. You must be a trustworthy person. You must carry out your what? Your record with what? Honesty. People should be able to depend on you. Then we have objectivity. As a professional accountant, you must be what? Objective. You should not allow people's what? People should influence your decision. You understand? You should not allow people to influence your decision. When you prepare an account, your account should be what? It should be true and fair. Don't allow what? Third party to influence your professional judgment. Sometimes some people allow their relationship with their husband to interfere with their judgment, which is not correct. Is that okay? Then we have the word due care. When preparing financial statement, you should what? People should, your client should be able to what? Be confident in the report you what? You prepare. So you carry out, when preparing a record, with due care. Is that okay? Then we have the word integrity. As an accountant, you must be what? Be a person of integrity. Integrity. You should be seen what? Your this financial statement or record you prepare. People should be able to depend on it. Is that okay? As a professional accountant. Then we have what we call what? Confidentiality. Your report as an accountant, your report, the information given to you by your client should be what? Should be carried out with confidence. You shouldn't expose your client's information, which as an accountant should sink into your head. Your information should be confidential. Protect your client's words. What you should be able to protect your information given to you by your client or your firm. Is that okay? Then we have what? Professional what? Behavior. So as an accountant, you should adhere to the professional rules and regulation. These are those ethics guiding what? An accountant. So without wasting up much of your time, I'm going to stop here. But then please feel free to ask questions. Okay? Next class, we are still going further. We'll explain more into it so that when we start calculation, you will understand why we are doing what we are doing. Is that okay? Thank you so much for your time. Please ensure you like, you share, you comment. Ensure you like, share, and comment. Thank you. I appreciate you for your time. Next time, when the calculation comes, we will make use of. But for now, we are still in the introductory section. Thank you so much. God bless you. Like, share, comment.